I'd like to welcome Stathis Gould from International Federation of Accountants. Now, Stathis, talking about non-financial risks, from a business perspective, have you seen a shift in thinking when it comes to non-financial risks in the last couple of years?
Thank you, Karen. Thank you for the invitation. I think certainly over the last 6 months, the response to the COVID-19 pandemic is a great example of how businesses are thinking about non-financials and non-financial risks first and foremost. If you look at the response from most organisations to the pandemic, it's been about people first, ensuring the well-being of their staff, understanding the implications in terms of changing customer behaviours, the consequences for their supply chain. So I think significant non-financial reporting risks have been a key feature of the response that companies have had to make to the COVID pandemic. And indeed, the transformations that have been going on in recent years around sustainability, ESG, digitalisation are really all non-financial related. And if you just take digital transformation in itself as something that companies have had to accelerate in the last 6 months, there's been a real consequence in terms of cybersecurity, which is having an enormous impact. I would say, secondly, of course, climate change is probably the number one systemic risk to economic and social stability. So that's really elevating the demand for more understanding and transparency on climate risk that organisations are facing, and there's a real demand from investors and regulators for more transparency and information. The whole ESG movement, as I mentioned, is really getting a big push from many investors and asset managers. And ESG really has multiplied the number of non-financial risk issues that companies are facing. And there's a whole variety of factors that may not be financially material today, but can impact reputation and the company's license to operate. And these can range from, and some recent examples include companies dealing with indigenous and human rights, child labour, safety, community relations. These are all great examples of how non-financial risks have the potential to really, threaten the license to operate and the existence of companies and their overall business model resilience. So, and lastly, I would sort of just reflect on the broader trend over the last two to 3 years of companies and their business leaders thinking about success and the purpose of their business beyond the returns that they deliver to their investors and funders. There is a real movement now to really thinking about the primary purpose of a company being about serving a broader set of stakeholder interests in a more responsible way and responding to key stakeholder expectations. So I think in that sense, we've seen, I think, over the last 2 years, a real, change in emphasis and focus on how to understand, measure and communicate on financial risks.
Thank you. And I guess sort of highlight, going back to what you've mentioned, and I know as our report covers that there's quite a wide range of non-financial risks. So how should businesses be looking at these, given, I guess, their interconnected nature? There are some challenges there.
Yeah, absolutely, Karen. Actually, if we think about the most important place to start, I think, is understanding the issues and non-financial risks from the lens of stakeholders. Who are your key stakeholders, and what are their legitimate expectations, and what are the wider macro economic trends and changes in your operating and business environment. So in that sense, it's just so important for businesses to prioritise their stakeholders and proactively engage with them. And that really, I think, provides the basis of understanding what the business needs to do and what it needs to achieve to respond to those expectations, and whether the company's purpose, what it's really about, its strategy and its value propositions fulfill and meet those stakeholder needs. So, that stakeholder process is obviously critical. It's supported by adequate data, relevant data, to understand the impacts that the company is having on the outside world and on its key stakeholders. And then from there, you can start to understand the trade-offs. So I think what's interesting about for, companies who are adopting integrated reporting principles, who really think about their business model and their whole value creation process, where their starting point is really around identifying those relevant value creation topics that are vital to their strategy and to their strategic differentiation. And those are the issues that really have the potential to create or destroy value to their key stakeholders, whether that's in relation to customers and the customer experience, viability of the business model, ethics and integrity, innovation and R&D, digitalization, talent, people development. All of these things are really the things that are ultimately going to drive the longevity and long-term success of the organization and its contribution to stakeholders and society around it. And then I think all of that provides the basis of thinking about what are those really key strategic initiatives and activities, and that really will then help to drive investment, capital allocation, and performance towards meeting those critical needs that have been identified through that stakeholder engagement process. And I think one of the ways of thinking about it actually is to really think about what outcomes do stakeholders demand or expect of your business. So, for example, if I'm a healthcare company, what is a healthcare company trying to deliver? What outcomes the stakeholders want from that company? So, in terms of employees, for example, generally employees might be looking for an innovative work environment and a safe work environment. Customers, they're probably looking at reducing their healthcare costs and receiving health solutions that enhance their well-being and their longevity. Governments, another key stakeholder, are looking for a healthier population that can lead to improved productivity. And what investors are looking for, probably higher returns and dividends arising from innovative products and responsible business. So I think taking that outcomes sort of base view of how do we sort of address what stakeholder expectations are, starts to unearth and reveal and highlight within the organization what those key non-financial risks are. And then I think one of the critical things, as you quite rightly mentioned, is really thinking about non-financial risks in a connected way. Non-financial risks, I think most people will recognize, can't be treated in silos. So, for example, water scarcity or access to clean water. If your business, like Coca-Cola or any other drinks business, depends on water as a key resource input, and you need to secure that supply, you need to really then think about what changes in production approaches, what changes in the supply chain, what changes do we have to sort of make in terms of enhancing our innovation and R&D to address the issues with water scarcity and access to clean water. And these are all questions about how we transform and change our business model and operating models. And I think climate is related to a whole range of non-financial risks that has knock-on effects. So climate, food security are all connected to geopolitical risk and social stability. And I think it's also important to connect, particularly for the accountancy profession and what accountants do, is connecting non-financial risks to the impact on the financials and enterprise valuation, and on the company's reputation and license to operate. I think it's important to measure non-financial risks, quantify the current and potential impacts it can have on financial performance, related to the P&L and to the balance sheet. And I think, finally, I think it's really important to think about how these risks are turned into opportunities and points of competitive differentiation. Because ultimately, for most businesses, it's how do we deal with these risks in a way that we can actually drive growth, drive new market opportunities, and what we need to make that happen in terms of other non-financial areas, talent, people, investment in innovation and R&D, for example. And I suppose one final thought is the nature of non-financial risks can be quite different than financial risks, in the sense that they are continuously changing, and they're always dynamic. Non-financial risks change in nature, can overnight or in months or in years, and they can emerge quickly. And we're seeing of late, issues around social justice, for example, and diversity emerge as very important issues for society and a whole range of stakeholders. So we really need to think about what processes we have in place to continuously monitor non-financial risks and the related issues and trends that occur over time, so we can get ahead of those changing expectations and social norms that are going on around us.
Thank you. And I guess you touched on it a little bit in your comments just before, but I guess, particularly relevant to, members who are chartered accountants, but what role and responsibility do accountants have when it comes to considering sort of non-financial risks for their business?
Yeah, Karen, there's a whole range of areas here, and it's incredibly important for the future relevance of what accountants do in business and industry in the public sector. I mean, first and foremost, of course, I think it's just absolutely critical to be business aware and stay informed. Maintaining a very sort of timely and clear understanding of what's happening around the organisation in its operating environment, and how these trends, changing regulations, changing policies, and stakeholder expectations relate to our objectives as an organisation and our performance. So actually monitoring and that scanning and having an outward focus is absolutely critical, and it's not actually what a lot of accountants are used to doing. But really, what we see is a lot of accountants working particularly in finance teams, finance and accounting teams, as really being the stewards of value creation and protection. And that involves providing information and analysis that can support decisions, that can support capital allocation and business resilience. And to do that, they're really having to combine and bring together financial and non-financial performance, value and risk data and analysis. And we really try and capture that in the CFO role by talking about an expanding mindset of the CFO, not just being about finance and financial management, but being about a chief value officer, which is really about them looking at value creation and protection more broadly from a non-financial as well as a financial lens. And I think this change in mindset is extremely important, and it is a great opportunity for the finance profession and accountants working in business to really become more effective strategic advisors and business partners in their organisations. And I think it's important to remember that accountants and chartered accountants, you'll find them working in all parts of an organisation across all three lines of defence, as it were, if we take a risk management perspective. They'll be working in the front line where, in management roles, and those management roles own the risks and own the opportunities. They'll be working in the second line in terms of in the risk management and control and compliance functions and in the finance function itself. And they'll be working in the third line in terms of assurance. But really taking that finance team perspective, I think once you have a good understanding of what the material and relevant non-financial risks are and what the priorities are, then it's really about how do we align those to our strategies and plans, incorporate them into our forecasting and our budgeting, our capital investment allocation and decisions, into our scorecards and KPIs, and how do we consider the financial impacts in terms of cash flows, asset values, revenues and costs. And I think very much the relevance of accountants in the future is about being good risk managers, and that's today, I think, about managing uncertainty, managing non-financial risks, and connecting those to the financial value drivers in the business. And that involves being aware and dealing with the principal opportunities and risks that are really relevant to the business and the business model in that organisations, and prioritising those, and thinking about risk not from just a mitigation perspective, as I said before, but in terms of how these issues can be turned into opportunities for value creation. And really, from there, it's about communicating and reporting those risks in a way that investors and others can really understand the nature of those and what the company is doing about them.
Excellent. Well, thank you very much. And that was Stathis Gould, Director of Advocacy from the International Federation of Accountants. And thank you for your insights.